Welcome to our today's feature presentation, Trade Futures at the Price Moves. Futures are a wonderful trading product. However, you should trade them for a minimum price move and at predefined entries, exits, and stops. And we want to give you an introduction how that can be done so that you trade the futures with the odds in your favor, and with that increase the opportunity and probability for you to produce money from trading. Please be aware of the risk in trading, so therefore take a look here at our little disclaimer. And with that said, let us dive into the topic. Today we want to focus on an example of how to trade the ES, the E-mini S&P 500 futures. And before we do that, there's some general terms which we want to share with you, giving you the prerequisites of making money trading. So number one, predictability. So you need setups that repeat themselves and give you a high chance that you can trade at them directional, because that's the best way of making money trading futures. And you want a high participation rate, so those situations shall repeat themselves often, giving you the opportunity to participate in a trade and trading by rules. Clear-cut rules, no interpretation, clear-cut entries, exits, and stops. And with trading futures, you're using leverage. That's a wonderful thing, but it goes in both directions, so therefore tame your risk. And when you made money, you can reinvest it, and with that produce a wonderful chain of income and future strategy for producing wealth. Let us share some trade imperatives. They might sound generic, but they will help you to determine doing the right thing at the right time over and over and over again. So first of all, you need to have a system that tells you at a certain point in time, when is there a point for a crucial potential price move directional to the up or to the downside. Further on, when should that come to conclusion? So that means you don't want to hold a trade forever. After a certain time period, you'll have to decide if the trade didn't reach your target to get out. Yeah, or if it did reach your stop to get out. But positively, we want to trade with a high probability reaching our goal, so predefined target, and then we exit, or we exit time based. Yeah, so we always define for every trade the positive exit, the negative exit, and the time. And so with that, we also balance, on the other hand, the risk and reward, because we have to give some minimum wiggle room for the price to come in its directional move to its target. So therefore, when we compare how much risk do we have to take in a trade to the stop in comparison to the reward, that has to strike a certain balance so that we can trade with the odds in our favor. For the systems we developed, we focus on a predictability of a price move above 65%. And that's very, very important in what you do, because then and only then you'll have the chance to long-term produce money. And it has to be predictable with that probability. On the other hand, it has to bring frequent trading, and I'll show you any examples of how that happens. And it has to have clearly defined entries, exits, and stops, no interpretation. That's very important. Let us come to an example of how that can be done. And we take the ES, the E-mini S&P 500 futures, and I want to demonstrate with the never loss trading trend catching model how you find your entries, how to specify your exits, and how to specify also the maximum time in a trade, and on the other hand, where to put the stop, all on the chart. In what we are doing and teaching, and what you will act on after, is how to trade rule-based. Yeah, clearly defined rules and confirmed signals. Yeah, so we want to have a signal when the direction is there, that the direction gets confirmed. If that doesn't happen, we don't want to trade. And as said before, we want to have a time-based exit, and here we say our time base is 3 bars. And we'll define together of how those bars are specified. And there's more rules to that, but that I best explain while we are looking jointly at a chart. What you see here is the never loss trading trend catching chart between September 28 and October 3, so very recent, where we recorded that. And let me take a pen here and we go through it. Yeah, so you see here at certain points there's a buy signal and there is an exit set. And as you know, either it's 3 bars of those, or if at bar number 3 there is a signal like over here that says again buy, yeah, because it had here a buy signal, then you take another bar. So rule-based easy trading. So you had it again here, signal, and at bar number 2 there was the out. We'll go further through this. And we have here again that signal, and the entry was right here. And then at bar number 3, 1, 2, 3, we were out, and then we'll make the new high here on October 3. Let us go and see how those rules are and what you trade for and how you can make money with this. We let the system paint bars that are 26 wide in price move. Only after the ES moved 20 ticks, a new bar will be started. Yeah, that's a range bar concept. So we enter 1 tick above a threshold. You see, and we go back to that. On the chart, there are clearly cut, defined entry and exit points. Let's look. On September 28 at 1 p.m. East, the candle closed and gave you a buy threshold saying, please buy the next candle if the price is above 2,507 and 50 cents. So 75 would be the entry. So 1 tick above this would have been your entry. And you see the next candle, then afterwards, going into the end of the day, ticked that price level out. Then automatically generated by the system was an exit, positive target exit, and a stop. Here, the red crossbar. So, and then you knew one thing, you plan to be in a trade for either 3 bars, 1, 2, 3, and they are time-based bars in a 24-hour environment, or if the third bar has a buy signal, which this one has, then we add another bar till we get to target, and that's what we did. So very clear-cut rule-based trading where you put the relation between reward and risk in a balance, where you look at your time-based exit and where you look at your positive exit at target. Thus, you can work with bracket orders, enter at ease, and because it's not a very fast-paced environment, you can trade at leisure because you have your stop in place, you have your target in place, and then you can walk away from the computer because there's nothing you need to control after the system gave you your entry conditions and the market fulfilled them within ticking out your minimum price threshold and moving ahead. So from the first trade situation, we now migrate into the second. So that was the first trade stop, entry, exit, and here we were at 4 bars that we concluded. And you see right after, late afternoon on September 29th, again, a buy threshold. Buy above 2,517 and 50 cents, so 75 is the entry. That got ticked out. And so then we were in a trade again. For how long are you going to be in it? 3 bars or 4 bars if there is another buy signal on bar number 3, but it didn't come to this because on bar number 2 here, the trade got fulfilled. And we had another positive trade as we had it here. And in none of the instances, our stop was infringed. So there was the stop, easy entry, easy exit. And if you want to learn that, we always teach one-on-one. We make sure that our traders get all the details, all the strategies to be successful long-term in that business. And we are coming up to 10 years in our trading education business, working one-on-one with people with focus on various different trades. Here today, we focus on futures and in particular in the ES of the last couple of days, but we have very many examples going way back where we can show you that the same happening is repetitive and happens again and again, and how a system can give you those thresholds where to enter, where to exit, and how much wiggle room to give for making those trades happen. Let us now calculate a little together of what that is for. What are we trading for? So when we have a 20 tick range bar and enter 1 tick above a threshold, then we are trading for 19 ticks. This is $237.50 if the trade realizes, and you saw just in a matter of 2 days, it happened 2 times. And what I say here is per contract, always for 1 contract that we take the basis here. And then you have a $275 risk, plus you have about a $5 commission. Some pay a little less. We trade more, so we pay a little less. And based on that, you'll need to have a 54% attainment rate to make that trade happen. That's very, very important. And this is why 65% is our issue that we are trading for. That we say the system has to produce 65% probability for you to trade with the odds in your favor, because when you consider slippage and when you consider commissions, then you'll need to be above that threshold to certainly and consistently long-term trade for making money. So far in the last couple of days, we've gone through the following situation here, trade situation number 1, which we explained, which ended here at bar number 4, then trade situation number 2, which came out here, and we do not enter at the exit bar here. That's another one of the rules. So this bar, and also we don't trade the 1800 bar. And then we have here the next trade situation. And you saw again, buy threshold, buy above 2,522 and 50 cents. So 75 again is the entry. There we need a little more wiggle room, but our wiggle room was never infringed. So there was the stop. And now we had 3 bar to come to target. Bar number 1, bar number 2, and bar number 3. So there we got out. So now you see 3 trades in a row, each for $237.50, with a meaningful risk at clearly defined entries, exits, and stops. Is that doable for other assets? Absolutely. Let me give you a short example for a couple of other assets that you can trade that way. But if you want to learn that, contact at neverlosttrading.com or call 866-455-4520. We are happy to go in detail with you, showing you live how it works, and we jointly can count the good and the bad trades, bringing you on the side that you trade with the odds in your favor. Here's a chart for crude oil, and at crude oil we trade for an expectation of 4 bars. It has its reasons, so therefore the rules change, but this is why we teach them individually to you and definitely also have them in writing. So where you see here the winning trades, this is where the opportunities arise, and at bar number 4 there was the out. That's where the opportunity came, so not infringed, and at bar number 4 there was the out. So here it just took 2 bars to get it out, and then we turned around and made winning trades to the upside as well. But also 1 loss happened. That was an open trade running here. But you count up the good trades, 3 good trades, 1 bad trade is a 75% attainment rate. And again, here you trade for a solid distance of a $200 price move, 1 tick less, $190 on a positive side, with overview of like a $220 risk with a high probability to get the direction right. And with that, you can move ahead and focus on turning your money when those opportunities arise and trade assets that move. So other example here, you would see like the Aussie dollar, Australian dollar. So again, here clearly defined entries, exits, stops. So we have here an entry where you see that win, and again 3 bars at this entry, and it only took 3 bars again. And there's certain conditions where you have no trade, because on certain times, why no trade? At the exit bar, you don't enter. So when trade conditions on the way, you neglect, but we'll teach you all of that one-on-one, and I'll give you a short outline what you can reach with it. When you go on our website, neverlosttrading.com, and you scroll down here, you find an overview of the different classes, concepts, and systems that we are featuring. What we did today was the Never Lost Trading trend catching model, and we only showed one of the strategies that we trade. So here you find more information about that concept, of how it works, and when you feel that that could be for you, because we have different examples of trading stocks, forex, futures. Today I showed a particular futures trading. If you feel that's for you, then challenge us for a individual hour one-on-one with us, where you can challenge, giving us the symbol and the time frame that you want to look at, and then we jointly go through and see how it performs on time charts, on tick charts, on range charts. So get in contact with us, do the following. Call us at 866-455-4520 or write an email to contact@neverlosttrading.com. And if you're not signed up for our free trading tips and reports and webinars, do that. It's right on the homepage. When you come at the front, you will have a little invitation where you can join us and be constantly informed of what's going on in the Never Lost Trading arena. We are open for new students working one-on-one. Time is always limited, so therefore do not miss out. We are looking forward to hearing back from you. Good trading. Bye-bye.